So the market goes down, the market goes up. The market goes down, the market goes up. But the power of the S&P 500 investing remains constant. Whether it's through VOO or FXAIX, these investments have proven themselves to be foundations to build long-term wealth. In today's video, we're going to be taking a look at these two S&P 500 investments. I'm going to share my personal results and explore why they've been go-to investments in my portfolio, even through tough times like we had back in 2022. So if you're new to investing or looking to strengthen your portfolio, I want to show you the benefits of VOO and FXAIX, plus explain why these investments always bounce back even when we have a market downturn. So if you're not already, don't forget to like, subscribe, and hit that notification bell. First, let's start with an overview of VOO. VOO is the Vanguard S&P 500 ETF. It tracks the S&P 500 index, giving you exposure to those 500 largest companies in the US. It's known for its low expense ratio, which makes it a cost-effective choice for long-term investors. And then we have FXAIX, a mutual fund that also tracks the S&P 500 index. It provides the same diverse exposure to that US market with low fees and the same steady historical performance. Both give you broad diversification across industries that will help protect against market volatility. So, one of the key differences between VOO and FXAIX is that VOO is an ETF, an exchange traded fund. It allows for real-time trading, while FXAIX is a mutual fund which trades at the end of each day. So when it comes to accessibility, VOO, you have access to invest into it on many different brokerage platforms, while FXAIX is on Fidelity. So when it comes to investing into the S&P 500, historically, they have had a rate of return of about 10%. But as I said, there are going to be some down years, and there are going to be some years where it is thriving even more. The last 2 years, we had returns of about 24% in 2023 and 2024. But looking back to 2022, for example, we had a negative return. The Federal Reserve had raised interest rates aggressively in order to combat inflation. So that led to higher borrowing costs, and that put pressure on companies and led to a general market decline. And looking back again in this little 10-year time span that I'm showing you, another issue that we were facing in 2018 were trade tensions between the US and China, causing uncertainty, and the markets do not like uncertainty. So while downturns can feel scary, they are temporary. History shows us that the market eventually recovers, and the S&P 500 in particular has always bounced back even stronger. So let me touch on why I have two investments that give me exposure to the same 500 top companies in the US. I do VOO in my taxable accounts because I want to have investments that I can tap into for early retirement or for whatever my needs happen to be. But I have retirement accounts over at Fidelity, and that's where I invest into FXAIX. So let me share my current results when it comes to investing into VOO. I currently have about 18 shares. I started investing into it back in 2022 when it was about $325. And as of the time that I'm recording this video, it is currently $544.40. My average cost is $429.23. I'm up 26.87%. I've gained $2,111.45 on this particular investment. My last dividend payment that I received in December was $31.70. Now on to FXAIX, which I've been sharing this particular investment that I started a little over a year ago in late 2023. I started investing into FXAIX when it was between like $140 and $160. It's currently $206.32. I have 730 shares with an average cost of $160.93. I am up 28.20%. I've gained a little over 33,000 on this position since I started investing. And my last dividend payment received in December 2024 was $526.40. So the ups and downs of the market don't matter as much when you're thinking long term. These funds are designed to build wealth over time, not weeks, not 1 year. So let's take a look at VOO. Over the last 5 years, it's up 83.77%. Over the last year, up 26.61%. Over the last 6 months, up 6.78%. But over the last month, down 2.39%. We have to be ready for the red days and just be consistent with our investing because, like I have shown you, this is an investment that will recover. This is an investment that's going to give you diversification across different sectors. It's going to shield you against those losses when a particular sector is struggling. And of course, you're getting hundreds of different companies in this one investment choice. So it has a proven track record. Over time, the S&P 500 has consistently delivered average returns of at least 8 to 10%. But we have seen, especially over the last 2 years, the way this particular index can thrive. Both of these investments have a low expense ratio, which leaves more of your investment remaining and not lost to fees. So I encourage you when it comes to investing to not be afraid, to not be worried about every pullback and downturn. We have to remember that this is part of the cycle. There are going to be economic events and things that happen that cause the market to pull back. The S&P 500 has weathered the recession, tech crashes, global pandemic, and it has always recovered. Think about the big picture. Focus on that when you think about your investments, that the market will recover if you invest into good, sound investments, ETFs, mutual funds, like we are evaluating here today. So whether you choose VOO or FXAIX, the key is to stay consistent with your investing. Dollar cost averaging has been my best friend when it comes to building up my portfolios. I stay consistent with investing whatever amount that I have, no matter what the market is doing. And I've already shared my results and my average costs of my investments. And I'm glad that I stayed consistent during the times that I was investing into these two particular investments and the market was pulling back. When it comes to dollar cost averaging, platforms like I'm doing these two investments on, which are Fidelity and Webull, they make it easy to get started. Just pick one that aligns with your particular goals and you can get started. So both of these investments, FXAIX and VOO, are both 5-star rated on Morningstar. So we can see here, and Morningstar rates these funds by evaluating the quality and stability, as well as evaluating how strong and reliable the investment strategy is. The trustworthiness of the fund parent company, in this case, we have Vanguard and Fidelity, as well as the historical performance, and of course, those fees and cost effectiveness of investing into these particular funds. So I was taking a look at this article, 3 reasons Vanguard S&P 500 ETF is a must buy for long-term investors. And I like this last point here. There's no wrong time to begin investing in the stock market to set yourself up for big gains in the long run. So get started, stay consistent, Trust the process. Get on track to building wealth for yourself and your family. So before we wrap up, let's take a quick look at this, the 10 best Vanguard ETFs to buy for 2025. Vanguard has a lineup of 88 options for you to invest into. So I just wanted to show you this list in case you wanted to broaden your exposure through ETF investing beyond the S&P 500. Number 2 on the list here is VTI, and that is another investment that I have in my portfolio. But also in the top 10, we have a bonds ETF, BND, and a total world stock ETF, VT, for example. So if you want to get started building your portfolio with ETFs, there is an ETF that will give you exposure to whatever you are seeking. Just evaluate the expense ratio, the performance, the exposure to see if it is in line with your particular goals. So I hope you enjoyed this video. I will be continuing to build into both these positions throughout 2025, and I will be holding them long term. So if you're not already, subscribe to the channel, hit that notification bell, leave me a comment, let me know your favorite ETF or index fund, help this channel to grow. You can support the channel by joining channel membership, as well as using my referral links for Webull and Moomoo. We will both get free stock. So again, thanks for watching. Okay, bye.